I'm Taylor Riggs in San Francisco in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, awaiting the vote. The Senate is getting set on whether or not to allow new witnesses in the impeachment trial of President Trump. But it looks like McConnell and the GOP have the votes they need. We'll bring you the latest as it happens. Plus, Brexit is here. Supporters are ready to celebrate after years of gridlock. We'll hear from British leader Boris Johnson in the hour. And Amazon shares posting their best one-day gain in more than a year after reporting a blowout quarter. One-day shipping and gains in the cloud have investors pushing the stock up to a $999.9 billion valuation. But first, after more than 3 years, Brexit has finally arrived. Let's listen in to the UK Prime Minister Boris Johnson's comments. And in the meantime, while we wait for Boris Johnson, I want to bring in Sebastian Salek. He's been there all day covering this news for us. Sebastian, what is your take? What are we expected to hear from the Prime Minister, Boris Johnson?
Well, I think he's going to strike rather a conciliatory tone. Remember, this is a country in healing, and that's very much something he's aware of. Half of the country didn't vote for Brexit. There are a lot of people who have no cause for celebration tonight. In fact, it's going to be quite an upsetting moment for them. If he wants to bring the country together, he's going to have to acknowledge that. And we've seen that so far. He's not joining these celebrations out here on Parliament Square. He's in Downing Street or nearby at least, but he's going to host a quieter affair tonight just for those who have worked on Brexit. So I expect some statement towards healing, because the next phase of his premiership is about what he calls levelling up the country. It's about putting money back into public services, back into education, into health, in order to really give people something that they've been lacking for a long time. That was his pitch in December. That won him a big majority, and that's what he now needs to deliver.
Well, that was his pitch in December. Let's go straight now to hear from the Prime Minister, Boris Johnson.
There's a third, perhaps the biggest, who had started to worry that the whole political wrangle would never come to an end. I understand all those feelings, and our job as the government, my job, is to bring this country together now and take us forward. The most important thing to say tonight is that this is not an end, but a beginning. This is the moment when the dawn breaks and the curtain goes up on a new act in our great national drama. And yes, it's partly about using these new powers, this recaptured sovereignty, to deliver the changes people voted for, whether that is by controlling immigration or creating free ports or liberating our fishing industry or doing free trade deals or simply making our laws and rules for the benefit of the people of this country. And of course, I think that is the right and healthy and democratic thing to do, because for all its strengths and for all its admirable qualities, the EU has evolved over 50 years in a direction that no longer suits this country. And that is a judgment that you, the people, have now confirmed at the polls not once, but twice. And yet, this moment is far bigger than that. It's not just about some legal extrication. It is potentially a moment of real national renewal and change. This is the dawn of a new era in which we no longer accept that your life chances, your family's life chances, should depend on which part of the country you grow up in. This is the moment when we really begin to unite and level up, defeating crime, transforming our NHS, and with better education, with superb technology, and with the biggest revival of our infrastructure since the Victorians, we will spread hope and opportunity to every part of the UK. And if we can get this right, I believe that with every month that goes by, we will grow in confidence, not just at home, but abroad. And in our diplomacy, our fight against climate change, our campaigns for human rights, female education, we will rediscover muscles that we have not used for decades. The power of independent thought and action. Not because we want to detract from anything done by our EU friends. Of course not. We want this to be the beginning of a new era of friendly cooperation between the EU and an energetic Britain. A Britain that is simultaneously a great European power and truly global in our range and ambitions. And when I look at this country's incredible assets, our scientists, our engineers, our world-leading universities, our armed forces, when I look at the potential of this country waiting to be unleashed, I know that we can turn this opportunity into a stunning success. And whatever the...
So I want to bring back in Sebastian Salek, who has been there on Downing Street all day long. Finally now, pretty dark out there, Sebastian. I want to take that and sort of piecemeal it piece by piece. He said this first comments, he really wanted to do his job to take this country forward. Where do they go forward from here?
Well, there are several projects that have been on the back boiler that have not really got the go-ahead. One of them is HS2, the high-speed rail network that connects London with the north of England. Remember, a lot of the people who put him in this Downing Street came from the north of England, came from the Midlands. So I think the idea now really is to focus on those people. But what's really relevant about what he was saying is the stuff that didn't get mentioned, and that is the next round of Brexit talks. Because if you think about all of the wrangling over the last 3.5 years, that was the easy bit. Now we come on to the talks with the EU, where Britain really defines itself and decides what sort of country it wants to be. We've heard from the EU President Ursula von der Leyen. She says that if you want no tariffs, no quotas, you've got to sign up for the level playing field provisions. That means close alignment with the EU, and that is not something that Boris Johnson stands for. So we're already setting ourselves up for a clash when those talks get underway. And remember, we've only really got 7 months. They're going to start in March time. They've got to be wrapped up by the end of the year. Otherwise, we end up crashing out. So there's not a lot of time to sort out what is a very, very complicated issue.
And Seb, what are the odds, in your opinion, in your reporting, not only of striking a trade deal with the EU, but also looking now at the U.S. as well?
Well, that's something clearly that's going to take a very long time. The feeling is that they're going to happen in parallel, although it has been said, Sajid Javid, the Chancellor, mentioning back in Davos that the EU does come first. And we saw that put Stephen Mnuchin's back up a little bit. But that's really it. It's about looking out to the US and to other countries as well and trying to find other partners. Because when you say go whistle, essentially, to the biggest trading bloc in the world that's right on your doorstep, you've got to find something to replace it from elsewhere. So Britain's in a very difficult position because they're not very strong in terms of their negotiating position. They don't have too much, really, to put on the table, and so they're going to have to be very shrewd about what they get out of the US and what they get out of the EU. Someone's going to get upset out of this. That is the tricky thing. Not everyone can be pleased. If there's one thing we've learned from Brexit, it's that. So it's a really case of cracking on and striking these deals so we can see what Britain's place in the world is going to be and how that can be sustainable.
What are British businesses saying?
Well, I spoke to the head of the British Ports Authority this morning and the National Haulage Association, so people who look after lorries. They really want some sort of a deal, of course, and they're talking about all the friction that's coming about. And the government has been quite clear on this, that we are going to get more friction, because if you move away from alignment with the EU, as they said they will, things are going to get more difficult. So there are businesses that are going to suffer. The political reality of that is a different thing. That hasn't hit yet. And when it does, I can imagine that there will be quite a lot of pressure on the government to get it right. Boris Johnson has used some quite incendiary, non-TV friendly terms about business in the past. Look them up. And business people will really be hoping that that's not the sort of attitude that gets shown as we go into these talks.
Well, reporting there live on the ground, it is Bloomberg's Sebastian Salek. Thank you for joining us. Now, the world's richest person just got a whole lot richer, and it only took a matter of minutes. Amazon CEO Jeff Bezos added $8 billion to his fortune after shares of Amazon posted their best one-day gain since December of 2018. The company crushing expectations in their fourth quarter results thanks to one-day shipping, Prime membership, and growth in the cloud. Amazon closed just shy of that $1 trillion market cap on Friday, closing with a $999.9 billion market cap. And coming up, lab work isn't the only battlefront against the coronavirus. Social media companies are trying to stop false stories from spreading as well. We'll have the details next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. The U.S. declared a public health emergency in response to the coronavirus outbreak in China, ordering as much as a 14-day quarantine of citizens returning from the province at the center of the outbreak and denying entry to some foreigners displaying symptoms. In addition, flights to the U.S. from China will be restricted to 7 airports. U.S. carriers have already significantly cut travel to and from the country. The actions, announced Friday by President Trump's newly formed virus task force, will begin February 2nd. Now, the battle against the coronavirus is not just limited to vaccines and quarantines. It's also an online effort. Social media companies are laying out how they are trying to keep misinformation regarding the virus from spreading. Here to tell us more about what social networks like Facebook and Twitter are doing, it is Bloomberg technology editor Alistair Barr. Alistair, start with Facebook. What do we know about the efforts they're taking to remove some of the misinformation?
One big move the company is making is actually removing misinformation about the virus. So things like, one example they mentioned is some people have been saying that you can drink bleach to keep yourself from being infected. That's an obvious one that's not true. And this is unusual for Facebook, where normally they might tag things as untruthful or misleading, but keep them on the social network. This time the company is actively removing information, which is unusual.
How do these plans at Facebook differ from some other social media companies like a Twitter or an Alphabet?
So Twitter is is saying that it's not removing misleading information. Instead, what it is doing, and similarly Google is doing a similar type of thing, if it finds that people are searching for information about the virus, it will start pointing people to the World Health Organization and some of the information that organization is putting online. And for both these companies, this is again a really quite a manual thing that they're doing here. Normally these tech companies allow their software and their algorithms to really decide what to do. And this time, it's a very, very untechy solution, and it really shows some of the problems that these companies face when misinformation and misleading information goes online very, very quickly, and they have to respond very, very, very quickly. Really, the manual approach, at least for now, is one of the only things they can do.
Well, and the manual approach is interesting, given how quickly we know that misinformation can spread. Why go manual instead of having an algorithm try to catch this before it really leads to a bigger problem?
Yeah, so I think the problem there is that, for instance, if you look at Facebook's traditional approach to misinformation, what it normally does is if somebody makes a claim online, they will send that information to one of the third-party fact-checking organizations that they work with, and these organizations have workers and experts who actually go and check the information, check whether it's true, and then report back, and then Facebook would tag it. That process, especially when it's something that is borderline or complicated, that process can take well over a day, and by that point obviously Facebook has billions of users, so that would spread, and people would be misinformed well within 24 hours.
And Ollie, I wanted to focus in on Facebook again, because this seems to be a little bit of a divergence from some of their other policies, namely with political ads, where they said that they will not remove political ads that have misleading or misinformation in them. Is this, I guess I should say, why the departure?
Yeah, I think that's a good point. One is that it's an ad, a paid ad, whereas the misinformation to do with the virus is unpaid sort of organic postings from regular people. That's one difference. I think the other difference is that Facebook argues, at least, that in the political realm, if a political ad is making a claim that can be debated, and a lot of political claims can be debated, then Facebook doesn't want to get in the middle of that and say, no, this thing that this politician said about Medicare is not true. That would open a whole can of worms. Whereas I think it's more clear-cut in this case, where Facebook has another very smart policy, which is if someone is saying something on the social network that could cause people harm, then they will take drastic action, and so that could fall under this policy where basically if someone's saying to drink bleach and you won't get the virus, that could obviously cause people harm. So they're acting more forcefully in that regard.
And Ollie, more broadly, sort of taking a step away from the coronavirus and looking at Facebook more generally, they hired a director this week as part of their sort of Supreme Court, if you will, to oversee content that should or should not be taken down. There's a 90-day rule where there's a lot of debate and discussion. How is that going, given there is such an eye on Facebook, especially with the coronavirus, to determine what information can and cannot stay on the site?
I think they're doing their best with a very tough situation. So in this new online world, social media networks, someone can say something on social media and they may be an individual person. They may not have checked that information when they say it. In theory, a social media network treats that piece of speech exactly the same as a heavily reported story that's been very, very thoroughly checked and somebody's spent months and months doing it. Those two things kind of stand equally in theory, and so that is a really hard problem to tackle. And if something that someone says it turns out to be not true, I mean, it is very, very difficult to just arbitrarily decide to take that down if that person then complains and said you're limiting my free speech. That's the type of thing where this new panel will come in and spend 3 months is a very long time in the social media world. So that really shows what a challenge these social media companies have in this realm.
Well, Bloomberg's Alistair Barr, thank you for joining us. Now, I want to bring in the CEO of one biotech company whose work may help speed up the development of a potential vaccine. Mark Imalfarb of Diadic International joins us now. Great to have you. We've been talking with a lot of companies this week that are working on vaccines or antidotes. What role are you playing in helping to find a vaccine against the coronavirus?
Well, our company, Diadic, is not looking to find the vaccine. We're looking to produce it at much larger volumes at lower cost so that when actually there's a cure and a treatment, because it's both, you need to find a cure and a treatment, we can make it in large volumes and affordably so that more people than less can get it. So almost like taking millions of dosages into billions.
And as you're talking about how more people could have a potential to get this vaccine, I want to bring some breaking news here. China is now saying that coronavirus death toll has now risen to at least 257 people. And the province where the breakout was reported is now reporting about 45 deaths as of January 31st. What's different about this disease after you've studied other diseases? Is it the rate at which it's spreading? Is it the death rate? What stands out to you when you examine this?
Well, we've been involved in a 4-year-plus program called ZAPI in Europe, and there's 6 institutions that are part of that group that have been studying the coronavirus, MERS, SARS, et cetera. So these things mutate, and I think that's the biggest problem is they've been looking at the coronavirus and different versions of it. And in this particular case, they're trying to identify what the gene is that we can actually mass produce the product from, both from a vaccine to vaccinate people and then ultimately a treatment, which would be an antibody. And our role in that group, which we've been involved in the ZAPI program, is to be able to make it quicker, faster, and cheaper, but ultimately so that you make enough, you can actually treat people. And as you point out, if it spreads and there's really an epidemic and a pandemic, it could be millions of dosages that are needed, or hundreds of millions in China. There's, 1.3 billion people in China? So if you had to vaccinate all those people, you better be able to make a lot of this at very affordable levels, or only a fraction of them are going to get treated.
When you take a look, we've been having this debate all week, an antidote versus a vaccine. What is a more effective treatment?
Well, I think obviously if you can prevent it in the first place, that's better. But of course, you can't do that in these cases because these things mutate and it's a whole new disease, right? And so you have to be able to treat it. And the health workers or the healthcare workers, the doctors and nurses, they're going to get infected by being there. And so you need to have both a way to prevent and treat. And so what we've been doing is working on a faster, quicker way to address the problem with this group called ZAPI in Europe. And there's 20 people involved in that group, including Boehringer, AstraZeneca, which are major pharma companies, academic institutes. And of course, our role is just to produce this, whether it's a vaccine or an antigen for the Schmerlenberg virus, which we did. And we produced that at 35 times greater levels than the second place cell line. So we're pumping out a lot of the stuff, and the goal here is to get partners, and we're looking for partners, and we're willing to work with anybody on the planet that has a gene that needs to be turned into either a vaccine or a antibody, a treatment, so that we can actually have products available so when people need it, it's there.
I wanted to bring another headline as we're looking. Spain, of course, has now confirmed another coronavirus case. This is according to their health ministry. So again, China confirming that their death toll rising to 257. Spain confirming a coronavirus case as well, according to their health ministries. You take a look at all of this. What partners are you looking at working with, whether it be in the U.S. or in the Europe, to make sure that you're able to get it to the most people as fast as possible?
Well, as I said, for the last 4 years, we've been working with the ZAPI program in Europe. For the last 2 years, the Israeli government, the Israeli Biotech Research Group called IIBR, on emerging diseases and threats, whether that's pandemics, epidemics, or biothreats. We have to be proactive, not reactive. So our company, along with these other institutes and academics and commercial companies like the Boehringers and the AstraZenecas and ZAPI, we're trying to get ahead of the curve so that actually we're there when you need it. Because it's nice to make things in a test tube and get a cure out, but if it treats 100,000 people and you need 100 million doses, that's a problem. And that's what seems to always happen. And to be honest with you, the status quo is not good enough, and we need to change that. And we're here to disrupt the status quo.
Yeah. Well, thank you to Mark Emalfarb of Dyadic International. Thanks for joining us. And coming up, love for the food delivery space, why some analysts are showing an appetite for both Uber and Grubhub. That's a look at our top tech calls, all next. This is Bloomberg. Let's take a look at today's top tech calls. PayPal was raised to a buy at Guggenheim on its transformative acquisition of Honey. Analyst Jeff Cantwell sees Honey as a significant positive for the stock and sees a long-term tailwind as the company expands into China. And Uber was initiated with an overweight at JP Morgan. Analyst Doug Anmuth set a $51 price target, saying the company occupies a leadership position of rideshare and food delivery in most parts of the world. He expects upside in Uber shares to be driven by continued U.S. rideshare as well as stability in international rideshare markets. And Credit Suisse raised their price target for Grubhub to $64 a share from $52 ahead of the company's fourth quarter results next week. He highlighted a blue sky scenario where U.S. food delivery market begins to rationalize in 2020, even without consolidation, as market participants pull back on promotional activity and instead optimize profitability. And coming up, Amazon almost over that $1 trillion mark briefly. It was happening on Friday as most recent earnings crushed expectations. That and more in our look at the week in review next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. We continue to await on the vote. The Senate is getting set on whether or not to allow new witnesses in the impeachment trial of President Trump. But it looks like McConnell and the GOP have the votes they need. We will bring you the latest as it happens. Now, a big day for Amazon. The e-commerce giant's shares at one point surging nearly 10% in their biggest one-day percent gain since October of 2017. This is after its fourth quarter earnings defied expectations, thanks in part to one-day shipping, delivering, and its giant cloud business's robust performance. Here to talk about all of this and more in our Week in Tech Review Roundtable, it is Wedbush analyst Michael Pachter. Wedbush is a market maker for Amazon, and also with us, Techonomy founder David Kirkpatrick. Michael, I wanted to start with you. I'm showing a chart here to our audience of that Amazon Web Services cloud growth. Growth slowed to about 34% year over year, one of the lowest rates ever, but is 34% enough still to get you excited?
You know, I think percentage is pretty irrelevant when we're talking about law of large numbers. So, you know, growing by a couple $1 billion year over year every quarter is enough. And, you know, so if they grow at 6 or 8 billion a year for the next 10 years, who cares if it's 30% or 20% or 10%. That's what's going on in their retail business as well. They're growing overall revenue by about $50 billion. And that's just not changing for the foreseeable future. So I don't think people should get hung up on percentage growth. They should look at absolute dollar growth, and it's humming along fine.
David, that sort of set us up nicely. I want to migrate from the cloud into that retail business as well. U.S. seemed okay, international coming in just at par. Your thoughts on the retail business, both U.S. and international, for Amazon?
Well, I think this company is executing extraordinarily in both internationally and domestically. I mean, look at the number of Prime subscribers, now 150 million worldwide. That's up 50 million since very recently, I think like just about a year ago. So, you know, I think I think of Amazon as kind of setting a new standard for business generally on execution and logistics. I mean, these people are astonishing.
Michael, I want to come back to you and talk about the ad business. It's actually kind of a surprise tool that might be a hidden gem here for Amazon. What's your take on the ad business?
You know, it really all comes back to fulfillment by Amazon. So they have a line in their earnings supplement called third-party seller services. And that's stuff that they sell that they don't own. So it's not Amazon purchased inventory, it's third-party inventory. That is primarily coming from the vendors. So if you buy a Krups coffee maker, take a look, the seller is Krups. And when Krups can sell directly through Amazon, then Amazon has the ability to charge them 30% of the retail price, and Krups is still selling it higher than they would sell it otherwise for wholesale. And that gives them the flexibility to promote the product on the website, and that's where the advertising dollars come from. So I encourage you, go look at the last 5 things you bought on Amazon, search that topic, search coffee maker, or crock pot, or toilet paper, and the first thing you're gonna see is promoted and it's sold by the vendor. That's a natural. That's where the advertising dollars are gonna keep growing forever. Amazon is killing it. I think David used every superlative that I can come up with. So yes, astonishing, incredible, extraordinary. They're best in class by a lot.
Yeah. Well, let's go straight back to the source. So, David, without superlatives, I want to get your thoughts on the ad business. Any potential that Amazon still has to pull any other levers they can and use ad for future growth?
Well, Michael described what's happening there quite clearly, and I learned something from what he said myself. But, you know, I think Facebook and Google are starting to feel pressure from Amazon, and particularly Google, I think. Amazon's ad business really is probably one of the many reasons why this company's results are going to keep getting better. Valuation is another matter. But I would say there's a flip side to the ad problem, which is a problem, which is that, you know, in the regulatory realm, there is some concern about this sort of 1-2 punch that Amazon can wield over their partners, quote unquote, because they can kind of strong arm them to advertise. And some regulators in various geographies have expressed serious concerns that it might not be that level of a playing field, especially for the smaller retailers who are selling on there, who kind of have to advertise in order to keep the pump primed.
You know, I'm hearing the optimism from both of you, so I want to come and take a look at a chart here that we're showing inside the terminal, which is the market cap of Amazon now. Almost at $1 trillion there in pink. It's $999.96 billion. We're rounding up there to $1 trillion. Michael, your take, is this valuation justified?
Yeah, I raised my target today. I've got them at 23.25 for next year for 1-year target, and that's a 20 EBITDA multiple. That is just not crazy. Facebook until today, Facebook and Google both traded at 13 times. So, you know, I'm saying Amazon is worth a premium to those guys because those guys are not going to grow anywhere near as fast as Amazon. They don't have the margin expansion opportunity. So, I think there's plenty of room for upside. That my target takes them to 1.15 trillion.
David, your take?
Well, what's amazing is that there is such an E now at Amazon. I mean, for years, we just sort of took for granted these were growth-oriented people and they were going to figure out the profits later. Now they're actually finally figuring it out. It's just one of the many things that they are surprising us with and impressing us with. So, I mean, I think it's a little pricey, but like I said before, if this company is establishing sort of the playing field for all of business globally, you know, they deserve a premium, and I guess that's what investors have concluded, including Michael.
Well, both of you have mentioned Facebook, so I want to pivot there next as we sort of draw parallels and take a look at what was good this week, and frankly, in Facebook's case, being good enough, just frankly isn't enough these days to get it done. Michael, 25% growth rate, not enough for Facebook?
I think Facebook's problem is they were priced for perfection, and they delivered greatness, but not perfection. They have 3 billion daily users in their family. And last I checked, there's only 7.5 billion people on the planet. So the opportunity to grow is pretty limited. Now, can they sell more stuff to those people? Can they deliver more ads across different services? Of course, and they'll grow for a while. But the addressable market of users is topping out, as opposed to Amazon that has literally about 1.5% of global retail. So can they grow to 5? Of course they can. That's a triple. Can Facebook grow to 9 billion users? No, not until we have 9 billion people on the internet, and we're not there. So that's the limiting factor. That's a gating factor for Facebook and for Alphabet. It's not a gating factor for Netflix and Amazon.
David, desperate to get your thoughts on Facebook. If you look at a chart here that I'm showing inside my terminal, we're looking at the PE multiple compression in the last few years, namely last year, given 2019 was such a heavy investment year for Facebook. Do you see this multiple expanding anytime soon? Do you see Facebook's revenue growth at 25% just not enough?
Well, it's the problem is the growth in their costs. I mean, the costs went up 51% in this year over last, the year that just concluded. And that's for good reason, because they still have huge problems that they haven't resolved. You know, they are not really addressing still sufficiently some of the problems of speech manipulation and hate speech and privacy problems. You know, they keep paying fines here, fines there. I think their costs will continue to rise because their social footprint is so vast, and the concerns they're raising in literally every country are huge. And in order to satisfy the regulators and the public in all those countries, they're going to have to keep increasing their governance expenses, because governance is something that in general they have neglected over the last decade, and they've been frantically catching up since the election of Donald Trump. They've caught up quite a bit. They've made a lot of very positive improvements, but it's super costly.
So, David, are we any closer to being ready for 2020 when it comes to Facebook, you know, preparing, spending enough to protect the elections?
Well, that is something I wish I could answer. They say that they're going to do a much better job, and, you know, they have some very cheerleading statements they make about that, but I don't think in general the experts are sanguine at all. I think that this is still a highly manipulable ecosystem, and I worry about it myself. And, you know, when you say this year, it's not just the United States. There are elections happening all over the world in every country, and Facebook is a huge primary media presence in literally every one of those countries except for North Korea and maybe a couple others. So I worry about it a lot. I worry about Facebook as a manipulable medium by dishonest politicians and political forces, and that is their single biggest problem, in my opinion.
Michael, I want to move on and preview Alphabet, which is quickly approaching next week. Are there any concerns that you can glean from Facebook that you can push forward to Alphabet, or will Alphabet be a different story than Facebook?
You know, I think that if you look at the four FANG stocks, Facebook, Alphabet, and Netflix all rallied a lot into their print, and 2 of the 3 have reported, and they pulled back since they reported because they were less than perfect. Amazon didn't rally into the print and then had a great number and ripped back up to where the other guys were. So it comes down to Alphabet. Has the stock gotten ahead of itself? And I think it has. I am not a fan of their management. They aren't transparent at all. They seem to spend money like drunken sailors on whatever the hell the flavor of the month is. So, AI, I get. Self-driving cars, I don't. I guess that uses maps or something. When I say they lack transparency, we don't even know what YouTube revenues are. So what is it with this company that they can't even tell us how they make money? And I think investors give them way too much faith. I think management will never run out of windmills to tilt at. And so I expect that they're going to print a fine number and the stock's going to go down.
Well, thank you for that wonderful analysis. Michael Pachter of Wedbush and Techonomy founder, David Kirkpatrick, appreciate your time. And coming up, inspiring small businesses and creators and making their ideas come true. That's what Squarespace wants to do with its online platform. That's next. This is Bloomberg. I want to bring you some breaking news that we're getting. Senate Republicans have blocked the vote, calling for new witnesses in the Trump trial. Looks like the motion failed with 51 opposed, 49 in favor. Only Collins and Romney were the only Republicans to join in on the Democrats. So again, Senate Republicans block the vote for calling in new witnesses in the Trump trial, something we had been expecting, but we will keep you updated as we get it. Now, serving small businesses and entrepreneurs, that's what Squarespace aims to do with its all-in-one online platform. And the company wants to show that mission in its latest Super Bowl commercial. Joining us to discuss the ad campaign and Squarespace's business strategy, it is founder and CEO Anthony Castellana. He is our latest guest as part of our Retail Transformed series. Anthony, great to have you. Tell me more about your business model.
Yeah, Squarespace exists to help people with creative ideas get online. So, historically, we've been a place where people have gone to get a domain, make a website, and host that with us. In recent years, we've been really expanding more into e-commerce and helping people transact online, in addition to just being able to create a site.
So, Anthony, we did a test of this site before we came on air. My wonderful producer here tried out your site. It took her only about 8 minutes to build her own website. What types of customers, businesses are your core audience here?
It's really, really broad. If you go to our template selection page, it shows everything from people making a portfolio to people selling online to wedding websites to small businesses. So it's a really robust platform that all kinds of people are using.
And when we think about the retail space in general, I mean, a lot of these can be startup mom and pop retail shops. You're thinking Main Street, who don't have the resources to really go out and hire up a major company to develop their website for them. How are you working more with some of these small businesses to make sure as online becomes more and more of a presence and where they need to be, that they can get the resources?
Yeah, well, I mean, this is one of the reasons why Squarespace was founded and why it exists, because we wanted to make tools that democratize access to being able to publish online and sell online. So by providing something that's really easy to use and really inexpensive, we hope that we're enabling an entire generation of people to get online who weren't able to before.
Anthony, of course, you caught my eye when you said that your company had been profitable for years. That's not something you see often, particularly with startups and in the tech space. How are you profitable?
Yeah, so we are in our 16th year now, and Squarespace has been operated to cash flow break even for years and years. As you mentioned, over the past couple of years, we've actually been profitable, and it's just kind of how we've run the business. It's always enabled us to remain independent, to invest in things like the Super Bowl ad, which we'll be talking about, and to reinvest a lot in R&D in the platform.
Well, and you talk about being free cash flow positive as well. Does that mean you don't have to get more money from investors if you are generating enough profit and free cash flow yourself?
Yeah, that's correct. Squarespace has always been able to operate off of its cash flows, and now, being profitable, it's even more able to remain independent.
Anthony, you're a unicorn company. Your last valuation was about $1.7 billion. Is being a unicorn in this environment right now helpful or hurtful?
It's not something we tend to think about a lot, to be honest with you. We're really just mostly focused on our products, our customers, and creating a great business. I think along the way that, we've been successful at that, and then you see the valuation following from that success.
Okay, talk to me about the Super Bowl ad. What can we expect?
Yeah, so this year was fun. We partnered with Winona Ryder, and she visits her home, the town she is named after, Winona, Minnesota, and she's on a journey of self-discovery, and it's a clever spot.
Now, this isn't your first year. I believe it's your 7th or 8th year going on the Super Bowl. Why the Super Bowl? Is it just an eyeballs number?
Yeah, this will be our 6th year running an ad. So it's a special space for us because, one, I mean, there's no other event like it. Everybody, over 100 million people are tuning in, most of them to actually watch the ads. And for a company like ours, where creativity is really important, it's at the core of our DNA, it gives us a special stage to be able to put a message out there in front of them, and it lets us take liberties that we wouldn't take in a traditional ad campaign.
Anthony Castellina of Squarespace, thank you for joining us.
Thank you for having me.
Now, sticking with the Super Bowl, VaynerMedia CEO says ads for Sunday's game are heavily underpriced, even though audience consumption is extraordinary. We'll have details next. This is Bloomberg. Let's get back to our topic of the Super Bowl and companies paying big money for that coveted ad space during commercial breaks. Despite only debuting at the 2019 Super Bowl, VaynerMedia has snatched 3 spots in this year's game. VaynerMedia CEO Gary Vaynerchuk spoke earlier with Bloomberg's Scarlett Fu and Romain Bostic about the Super Bowl ad evolution. Take a listen.
What makes a successful Super Bowl spot is the business results 3, 6, 12 months later. And there have been so many different ways to go about it. Ultimately, you're trying to create relevance with a consumer to actually get them inspired to go transact with your business.
So, I mean, Gary, though, how do you do this on a day that's not Super Bowl Sunday? Obviously, the Super Bowl is kind of a captive audience for millions and millions of people. But, you know, on any other day, most of us actually go out of our way to sort of avoid commercials.
Yeah, I'm a full co-signer of this. I've been very unpopular in Madison Avenue circles for a long time, saying that regular television commercials are grossly overpriced for the actual reach and consumption that happens. Madison Avenue continues to believe in GRPs and potential reach of commercials. I love watching your program when activist investors come on board and think about finding operational savings. When this world, Wall Street, realizes the egregious waste of money that Fortune 500 brands spend on television commercials, it will change the landscape of marketing.
But in the meantime, they are trying to make hay while the sun shines. So that means taking advantage of the Super Bowl and the captive audience that is there. Now, clearly,
on the flip side, but I'm sorry to interrupt. To your point, the Super Bowl is grossly the most underpriced ad in the world.
What?
Even at $5.2 million, what you get in a third to 2/3 of America actually seeing it on YouTube during the game, and then on the following Monday, the actual consumption is extraordinary.
The consumption is extraordinary, but how does it necessarily lead to an engagement between the consumer with the product or with the service? You say that you have to wait 3, 6, 9 months out. That's a huge investment for something 3, 6, 9 months out.
Well, you're betting on the fact that you're actually going to get it seen, which is the biggest problem in media today, even getting the opportunity to have it seen. Then, to your point, the creative is the variable. You look at Squarespace, they've run a decade worth of commercials. When I talked to the CEO, he's like, some years were great, some were terrible. One variable was the creative. Was that 30 or 60 seconds tremendous?
Mm-hmm. So, Gary, though, we have seen some companies, though, actually say, oh, you know, we'd rather not advertise on the Super Bowl, that the costs are a little bit high, the pressures are also high. What do you say to a company like that if they were to come to you and say, you know what, we don't want any part of this?
Look, I think I'm a huge fan of it. I think, listen, I'm like the social media digital guy, and I'm pushing for the underpriced ads on TikTok and Spotify and LinkedIn and Facebook and Instagram. But I do believe that the Super Bowl is wildly underpriced. But you can also stunt it. Mint Mobile decided to do a print ad in the Times to build up chatter for, we're not going to take the money into the ad, we're going to give away $5 million. So I think there's a lot of different ways to play it. Do you actually have strategy on how you attack it? The problem, my friend, is a lot of those brands, instead of spending $5 million on the spot and another $500,000 to $1 million on the creative for the spot, in that $6 million are then going to spend $6 million on regular TV, on digital products like banners and pre-rolls that are also overpriced. And so I watch brands waste $6 to $25 million all day long when the Super Bowl was sitting there for them underpriced.
Okay, you talk about the Super Bowl commercials being underpriced. Hard Rock International is paying for a Super Bowl ad, but it also, of course, is going to get a lot of recognition because the venue that the Super Bowl is playing in is the Hard Rock Stadium in Miami. What is the strategy for a company like Hard Rock, which is being featured both in a television commercial and as the site for the game?
Right. So Hard Rock, for disclosure, we're the agency behind the J-Lo spot that's going. You know, obviously the new Guitar Hotel is a big deal. We really want to bring awareness towards that. And to your point, naming rights, when you have the fortune of having Super there, it's going to be mentioned. But we're going to tell a 30-second story in that Super Bowl spot that's going to showcase the actual hotel. And then very simply, will the top of the funnel brand awareness of this incredible Guitar Hotel and then lead to business opportunities? More importantly, do we get to retarget the people that are now aware of it because of that mass reach in our digital executions to close rooms and get people to go there?
Hey, real quick, Gary, is Mr. Peanut going to live or not?
I can't tell you. Sunday you'll find out.
That was VaynerMedia CEO Gary Vaynerchuk. And we are based in San Francisco, so we wanted to wish our own 49ers a very good luck on Sunday. And that does it for this edition of Bloomberg Technology. Bloomberg Technology is live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at QuickTake on Twitter. This is Bloomberg.